I'll just jump. Yeah, I'll jump in next. Industry consolidation is inevitable. There are many platforms, protocols, other players have strong synergies. I mentioned earlier that we have these licenses we're launching fourth quarter of this year. And we've already been approached by, I can't mention who, but some well-known groups out there who are worried about regulation, who are worried they don't have the proper licenses. And we haven't even launched yet. So it's definitely happening. There's also, banks are playing an increasingly smaller role in the financial system because of DeFi, and they're going to be forced to adapt. And one way to catch up for them quickly is through acquisition. The banks are doing a lot of R&D. When I say banks, just financial services firms in general. And we're in discussions with them. We, as potential partners, et cetera. When that tipping point occurs for digital assets, and 2 trillion is not a tipping point yet, so it may be 5, it may be 10 trillion, they're going to come in a big way. And we're seeing it right now. There's one bank, one of the largest international banks in the world. Over the last 5 years, they've had an internal blockchain system, a private blockchain system for FX. And they shared with us that they traded $2 trillion over the last 5 years internally, somewhat similar to the JP Morgan coin, but it's something that's definitely happening. Additionally, now, I don't know if all of you saw the news, but Steve Cohen, a well-known trader, just invested in a quant trading group called Radical, which is part of GTS, which is one of the top 3 market makers, traditional market makers in dark pools and the exchanges. So that's going to be a highly volatile fund, but they're looking for investors. So I think the active fund management approach is probably the best approach here, because if you're trying to do it yourself, unless you have some deep knowledge in the space for yield farming and some other components, you could lose as much as you could gain.